Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for June 1st, 2009. This is Patrick Ceresna. As always, we're going to first start with the S&P 500 using the Spider Exchange Traded Fund symbol SPY. And Friday saw us have a very strong end-of-day rally in the last few minutes of the market that pushed the market to even slightly higher highs on the Spider before taking a little bit of profits. And more or less the question becomes, what now? I mean, is this an official breakout on the upside, or is this just going to continue to consolidate? We continue to favor and position ourselves for the scenario that we're, even with a false breakout on the upside, will more than likely be range bound along these zones over the upcoming month with no progress in either direction. But if our scenario is not right, how does this play out? I mean, the one thing that we can't rule out, and I will start changing my tune if we start spending 2-3 days above the 94 zone, would be a scenario that we rally all the way up into the 100 to 102 zone on the upside, and that this entire pullback in the last 2 weeks has just been that midpoint consolidation. At this stage, we continue to favor the first scenario of a range-bound market, but we will very quickly change our opinion if we consolidate several days above that 94. Next here, I want to take a look at the ISE US Regional Banks Index symbol JLO, and more or less this is actually a good reflection of what's happening as the market is actually progressing higher in the broader sense without the participation of a lot of the mid-range stocks, and these regional banks really have not participated on any upside and actually have consolidated quite strongly in the last couple of weeks. At this stage, we obviously have the charts turning up slightly, and we can't rule out the possibility of a rally back up into the $18-19 area, but we are not anticipating any short-term rally here to be of any significance. Next here, I want to take a look at the ISE Syndex, which is the symbol SIN. This is an index of all the casino, tobacco, and distiller companies, and you can see the rally has been very robust off of the March 9th lows. The casino companies have been one of the big rebound sectors, and more or less as that rally is coming, we began a consolidation zone between that 84-86 zone on the downside and that 9500 focal point up above. The question becomes here is this just simply a triangle formation, that consolidation prior to a continuation of the prior trend? If in fact that's the case, we don't expect the next leg to be as robust, so we are watching two particular points. So if we get above the 100 zone next week, the 103 to 108 is a very shortened move, and a completed upside target could be as high as the 114 to 116 area. At this stage though, until we break above 100, that isn't what we're looking for, that we continue to be suspect of a topping formation. Next here, I want to take a look at the Home Builders Index, which is the symbol RUF. And what I want to just point out here is that we continue to see a little bit of consolidation in this sector, and we readjusted some of the focal points and drew in that blue box. That blue box represents a natural retracement zone for the rally that we've had. As you can see, we continue to tap into the top end of the box, and even a little bit of a short-term sell-off into there. It doesn't particularly bode bearishly for the Home Builders Index. More or less, we've seen some a nice double bottom put in over the last 6 months, and any pullback should more or less be contained into this area. Next here, I want to take a look at the ISE Natural Gas Index, which is the symbol FUM, and we more or less had a consolidation right into the retracement box, which we drew out on there, and are now reversing with a potential breakout above this 87 zone. And with the continued weakness in the US dollar and the strength that we're seeing in commodities, it is actually quite reasonable to anticipate that this may in fact be a bullish breakout on the upside if it can get over that 87-88 zone. And if it does, then our target zone will be up into that 95-98 area up above. Next here, I want to take a look at the ISE Mini FTSE 100 Index, which is the symbol UKX, and more or less we continue to see the sideways consolidation between the 420, 430 on the downside and that 450 to 460 on the upside. Really, at this stage, we are seeing some relative outperformance in international markets over the U.S. market as the U.S. dollar continues to weaken. Really, if this continues to look like this flagging formation, we can't rule out the possibility of an upside breakout, but we continue to first and foremost to anticipate range-bound markets. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.